makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Bloomberg has learned that Apple is in talks to build Google's Gemini AI engine into the iPhone in a deal that could shake up the industry. It's, of course, a big week for central banks, with the BOJ expected to hike rates for the first time in 17 years. We'll also get the decisions from the Fed, the Bank of England, and the S&P. Plus, Vladimir Putin warns that Russia will not be stopped from pursuing its goals after a predictable victory in a tightly controlled presidential election. So good morning, everyone. A lot to talk about today. We're going into a very busy week, but let's look at the European markets map overall. Now, stocks here in Europe, I guess, rising a touch. Investors really awaiting for policy decisions from the U.S. and Japan this week for some of the near-term trading cues. I want to look at the S&P futures. They're actually on the way up. A lot of the focus will also be on NASDAQ futures because of what we're hearing. Not only Apple in talks to adopt Google's AI engine, but also the fact that there's a big conference starting this afternoon with Nvidia, the key highlight later on with the co-founder. So you can see the S&P futures getting some 0.4% here in Europe, a little bit more of a muted approach. But again, consumer products actually leading the advance. Reckitt Benckiser are rebounding after last week's sell-off. The other thing we're looking at for is, of course, the Federal Reserve's policy meeting. So let's also look at treasuries. That may indicate the direction of global stocks for the next quarter. Now, prior to the blackout period, we did hear from the chair, Jay Powell, indicating that the central bank was actually really close to having the confidence to cut, while other debated how deep, how shallow those declines will be. And then the big one, of course, this year, not only is the 10-year Treasury yield nearing a 3-week high after rising more than 20 basis points last week, but the big one is, of course, what we're expecting from the BOJ. And so you look at yen 149.14. Look, this is a huge one, and we could have a reversal of the last 17 years as soon as tomorrow. Bitcoin, 67,800. Now, it is shaping up to be a big week for tech stocks, with news of a potential deal between Apple and Google that could see the next generation of iPhones powered by Google's Gemini AI engine. The Nvidia is hosting this annual AI conference this week with expectations high for a new product announcement. Now, with us now, Matt Blotzham from Bloomberg Intelligence and Sofia Orta-Costa from Bloomberg Markets Today. Now, there's so much, of course, I hope that, Sofia, everything gets powered actually with AI. Can Nvidia, again, support, it feels like it's supporting the whole global stocks market.
It really is. And we saw the inflows data last week from the team of Bank of America showing record inflows. U.S. stock funds attracting record inflows of more than $56 billion in one single week. A lot of that is obviously going into the AI story, which strategists at Goldman say will not just benefit a handful of stocks, but the whole market generally. There's a lot riding today on Nvidia, and what CEO Jensen Huang says with his keynote speech expected in the afternoon. He normally tends to announce new technologies, new products, and what that will mean for the outlook going forward. The conference is actually so important for Nvidia's stock that strategist, I think it was the team at Bank of America, I might be wrong there, but they called it the AI Woodstock, and that just really shows
the Glastonbury. I love it. The Glastonbury.
It really it's a festival of sorts for the AI industry. But again, just to really illustrate how important this is, not just for Nvidia, but the whole stock market. The stock actually rose, despite it being a very volatile week. It actually rose for 10th week last week, which is a record streak of gains for Nvidia.
I mean, I've been getting like memes on Nvidia, I have to say, all weekend, or like little snippets out of what we can expect from Nvidia. I mean, are we thinking about new products, or will they just explain how they will expand in the future?
I think it's a mixture of all those things, to be honest. I think definitely people will be going to be looking for cues from the CEO keynote about whether this $1 trillion addressable market they talk about is going to get even bigger, and where beyond the kind of current demand that's going to be driven by. But I think more crucially, obviously, we see a lot of noise from their rivals, kind of AMD, even Microsoft, Google, Apple, developing their own chips. What can they do to continue to stay ahead of the pack? And so there's a couple of things there. There's the new product. So I think the one that's really in focus is the B100, which is the next generation, to the H100, which has been the thing that's really driven the stock in the last 12 months or so.
So what exactly is that, Matt? It's basically like a microchip that can do more advanced things?
Yeah, exactly.
Like
so I think it's just a more powerful chip, essentially, kind of potentially using kind of smaller kind of nano, like kind of denser circuitry, so giving them more power for essentially for lower energy consumption. So the kind of next iteration, and that's due to come out this year. So I think people are going to be looking to see when that's actually going to be available, and whether current customers are going to wait for that to arrive, whether they can continue to buy H100 chips. And then there's this question about their development cycle. So they've currently been on a 2-year development cycle, and there's talk that they're going to go to a 1-year development cycle. So that will essentially speed up the rate at which they bring new product to the market and potentially continue to allow them to keep a competitive edge over these rivals.
So I was going to ask about the rivals. What does it mean for the rest of the industry? And what did you make? I mean, we had this nice, Apple scoop.
Yeah.
Is that a huge deal?
I think with the Apple scoop, certainly, I mean, it looks like it could be a huge deal. Yeah, so, if you suddenly got 2 billion or so Apple iOS users on the Gemini AI engine, then for people like OpenAI, even Facebook with their own developments, that kind of gives Google a real big edge in terms of the scale and money that's coming in to support the continued development of that, and all of the information and feedback you get from people using your platform. So I think, definitely for Google, it'll be a really good big scoop to get Apple into that ecosystem.
Sophia, I mean, again, when you look at, I guess, what's, supporting this economy, I know there's a lot of talk about, Treasury. We've scaled back what we're expecting in terms of Fed cuts. But what are actually, fundamentally supporting this economy? It seems that, for example, Bitcoin, but also gold is rising. So it's the market is behaving a little bit differently than it used to.
Yeah, it is. And, will earnings kind of support this? Because we have seen kind of an everything rally. We did see some cracks, though, at the end of last week. Bitcoin falling from its highs, also Nvidia falling. Remember, a 1% move in Nvidia is a very, very big move in terms of market cap, and that really sways things. But it's still holding up strong, and valuations are still high. And it seems that every single week when I come into the office, Francine, there's someone on Wall Street saying that valuations are too high and are getting frothy, and someone else is saying, actually, there's all these reasons why they'll be substantiated, and earnings really have to come into play to support valuations right now, especially in terms of tech. Where we see yields, I think this week will be an incredibly important one. Market's a little bit frustrated with Powell's silence on that, but really interesting to see where the macro picture goes from here and what investors will kind of focus on in the market.
Is there still actually an industry that has yet to be disrupted by AI, or that has yet to be that the disruption has yet to be priced in?
I think there's still a lot of industries that have yet to be disrupted. And when you think about generative AI in particular, we're still at the kind of really early stage of how people are deploying this. So even some of the kind of more advanced industries like advertising, for example, every agency is using Gen AI in some way, shape or form, but they're still kind of learning it really. If you think of like the auto industry, which is probably potentially a really big opportunity for AI, something that Nvidia talk about, there isn't really any AI in the auto industry now. We barely have autonomous driving. So I think there's so many industries where we're at the very early stages of how people are thinking about how Gen AI could benefit or disrupt those industries.
Is there something, is there another rival that could actually really benefit from Nvidia, or does it, like last time, just bring the whole industry up with it?
Well, I'm not sure so much, but clearly kind of people like TSMC who are potentially kind of partners in Nvidia in developing these technologies could definitely get a benefit if they come out and give a really optimistic outlook about product development cycles and the addressable market. So I think, but it kind of puts the pressure even more on the likes of AMD to kind of continue with their own investment to kind of make sure that they at least don't let that gap get bigger, and hopefully aim to kind of close it with Nvidia.
Okay, Matt and Sophia, thank you so much. Bloomberg Intelligence's Matthew Bloxham and Sophia Ortega-Costa from Markets today staying with us. Now, coming up, the BOJ headlines a big week of central bank decisions with its negative interest rate policy expected to possibly end tomorrow. So more on that decision next. And this is Bloomberg. So it's a big week for central banks, the Fed and the Bank of Japan, among those set to make rate calls that will affect half of the world's economy. Well, I'm now delighted to be joined by Derek Halpenny, Head of Research for Global Markets, EMEA, and International Securities at MUFG. And still with us, Bloomberg, Sofia Orta-Acosta. So thank you for sticking around. Derek, welcome to the program.
Thank you, Francine.
You must be in, like, all your state. BOJ.
Yes.
I mean, is tomorrow the day?
Yes, I think tomorrow is the day. I don't think I can recall so much telegraphed news-breaking headlines from numerous different sources and not one denial from the BOJ. So I think we're absolutely set up. The market is priced.
So the market is ready. There's no surprise. I mean, there are a couple of things that they could do with the balance sheet.
There is. There's lots of dynamics that need to be addressed. Obviously, the interest rate structure and JGB purchases is in relation to the yield curve control segment. And then there's the other assets like ETFs, REITs, commercial paper, corporate bonds. All of that has to be addressed. And then guidance is the other aspect, which will be hugely important as well. But, you know, I think my sense is that maybe the markets are thinking it's one and done.
Yeah.
And I think the BOJ are going to announce, and I think they certainly should announce it, in a kind of a celebratory fashion. There's been mild deflation in Japan for nearly 30 years. And the QQE framework that was put in place by Governor Kuroda in 2013 is going to start being dismantled tomorrow. And there should be a positive message given to the markets that mild deflation in Japan is over. And equity markets seem to be certainly taking that on board.
But, Derek, what's the most difficult part of their operation tomorrow? Is it the messaging that you're talking about? And what does that need to be one, I guess, of hope or, you know, finally we've achieved something? Or does it need to be more cautious?
It is the difficult aspect. There's the celebratory aspect, which I think they should certainly do in terms of emphasising that deflation has ended. But at the same time, they have to be cautious in terms of stepping away from the framework that's been in place. There was a hugely important speech by Deputy Governor Uchida on the 8th of February. It's on the BOJ's website. I urge viewers to have a read if they want to see what could happen tomorrow. Because he broke down exactly the type of measures that could be taken. And in relation to JGBs, what he said was, in moving away from a quantitative policy focus to one allowing interest rates to be determined by the market, you have to do that in a cautious manner. And they are going to announce further JGB purchases. Yeah. We think probably the pace remaining at the recent pace, which is about 6 trillion per month, with the flexibility of doing more if there's any disruptive price actions. So there will be that flexibility to ensure there isn't any kind of disruptive big jump in yields.
So is that positive for yen, or is a lot of the good news priced in?
If you'd asked me 2 or 3 weeks ago, I would have said the yen's going to strengthen for sure. Obviously, last week, yields in the US jumped. We had disappointing inflation data. We've got the FOMC the day after. So in that context, given if it's what I think in terms of tomorrow, the yen could strengthen a little bit, but I think there's going to be a lot of caution ahead of the FOMC the following day. If the Fed drop one of their dots, yields could jump further. And the big lesson from last week is that with dollar yen jumping from 146.5 up to 149, the US is more important. Although, from a medium-term perspective, tomorrow is a really important moment for Japan.
Sophia, we also had not bad news from China, and I don't know whether that complicates, of course, what we're expecting in terms of stronger stimulus.
It does. I mean, that's the kind of idea that markets are having right now. It does seem that the market isn't pleased with whichever news it gets out of China. Either the economic growth is not strong enough and is disappointing estimates, or we're not going to get enough stimulus. But really strong factory output and investment growth to start the year in China. Retail sales only kind of matched estimates. A little bit of a slowdown after the Lunar New Year kind of spending boom holiday period. But the weak point is still very much property investment is still in contraction. That's the worry points for investors and for markets. But the fact that actually the economy is doing a bit better than expected perhaps makes that around 5% GDP growth goal for this year more achievable. And the idea is that policymakers maybe don't have to throw more stimulus at the economy throughout the year. I think this is positive news, though. This is what this is what China has been trying to do for a number of years now, and managing the recovery from COVID has been a lot trickier than expected. The consumption story and the property story has been a lot, it's still a source of concern. And at least for markets, this does suggest that maybe at least the central bank on the monetary stimulus front and maybe the government on the fiscal stimulus front will be a little bit more reticent to add to its plans for the year.
And Derek, you've just come back from China. Are you confident that it's not as bad as people say?
Certainly, the people I spoke to in Shanghai, they were definitely more optimistic than what I sense from obviously being in London. And Shanghai was certainly very busy, and I certainly felt the optimism was higher than what I was anticipating. And we do have a reasonably optimistic view that although the housing sector and that aspect isn't going to go away as a negative feature, even just a moderate pickup in consumer confidence can certainly have an impact in terms of helping growth pick up from here.
All right, Derek, thank you so much. Staying with us, Derek Halpenny from MUFG and Bloomberg, Sofia Orta-Acosta, thank you so much for joining us today. Now, coming up, more central banks. We turn to Europe for a preview of the BOE's policy decision on Thursday and, of course, the final reading of Euro area CPI data due out shortly. It's all happening this week. That's next, and this is Bloomberg. Well, it's not just the BOJ set to make a key decision this week. We'll also hear from the ECB, the BOE, and, of course, the Fed. Still with us, Derek Halpenny, Head of Research for Global Markets, EMEA, and International Securities at MUFG. Also joining us, Bloomberg's Phil Aldrich. So thank you for either joining us or sticking around. Derek, when you look at the Fed, so there's a lot of questions about dollar and whether there is gradually a move away from dollar, certainly from other central banks. But in the more immediate, how many cuts from the Fed and what does it mean for dollar?
Our view is that they'll cut for the first time in June, and if they start in June, I see no logical reason for them to suddenly stop at a meeting. So I think we could get 125 basis points of cuts. And, when you look at the consumer, I think the consumption side of the economy is slowing. Some of the leading indicators, the survey data on the labour market, definitely slowing as well, although admittedly it's not obvious in the NFP data. So I still think there's time for enough data to roll in to justify the beginning of rate cuts in June. So we think, over that time, it's reasons to be bearish on the US dollar. So we have a weaker dollar by the end of the year.
So what's the most interesting, when you look at, foreign exchange, what's the most interesting pairing right now against the dollar?
I guess given what we were speaking about, possibly dollar yen. Certainly in terms of positioning, that's where there's a lot of scope for the liquidation of a very large build-up of yen short positions. But you need that scenario that I just spoke about to play out, and then I think you can get a pretty big move, potentially down to the mid-130s by the end of the year, if we get the amount of rate cuts that I've mentioned. So dollar yen is an obvious interesting one.
I was going to ask about sterling. This is like a gift on a silver platter for Derek. There's a lot going on in the UK. I don't know whether, this is politics. There's, the BOE that's in a little bit of a tricky spot. What are we expecting in the week ahead?
So no move is generally expected for the BOE. So 5.25% rates held. The changes are going to be in the language, in the minutes, and also there could be a shift in the vote. Because obviously we had two people voting for rate hikes, one person voting for a rate cut, and the other six are holding last time. You could have a shift. One of the two voting for rate hikes could move into the hold pack. But
still a three-way split.
Three-way, I think, the general consensus is that there's still going to be a three-way split. The first rate cuts are coming August, June at the earliest. But you've got sort of the employment data has been softening lately. We did see a big spike in redundancies, and that is one of the early leading indicators. So Wednesday's inflation data is going to be quite critical, but you wouldn't expect them to be. I mean, Bailey has called the March meeting live, but I don't think it really is.
Yeah, there's also not a press conference. So it's always it's live, but without a press conference, which is extremely frustrating, right, for traders and journalists. Derek, what do you do with the UK right now? So again, there's we're looking at an election. We think by the end of, it has to be by the end of the year, but probably towards the end of the year. Yeah. And there's just so much. I don't know whether it seems safe compared to other countries, or whether actually it could, a lot could change.
Yeah, I think we've had 18 months of pretty much dreadful economic data. We've had the largest energy price shock in Europe, which has now pretty much fully reversed. So I think there is scope this year for some moderate pickup in domestic demand fueled by the consumer. And when you look at the UK in terms of the justification for a central bank holding off on rate cuts, the UK's justification is far more compelling than it is, I think, for the Fed or the ECB or elsewhere. So I think in that context, if we do get that even moderate improvement in growth, with the Bank of England being justifiably more cautious because of wages, August, I think, is the earliest. And in that sense, there is scope, I think, for the pound to strengthen.
But they also can't actually cut too close to the election. Is it something they'd be thinking about?
Can they not? I don't know. I think if there's compelling enough reasons and the inflation data backs up the timing of the rate cuts, if the election is November, it argues August would certainly be the timing for start.
All right, thank you both. Derek Halpenny from MUFG and Bloomberg's Phil Aldrich. Coming up, Vladimir Putin secures another 6 years as Russian president. We'll discuss what it means for the war in Ukraine and Western security. That's coming up shortly. And this is Bloomberg. So Bloomberg has learned that Apple is in talks to buy Google's Gemini AI engine into the iPhone in a deal that could shake up the industry. Now, it's a big week for central banks, with the BOJ expected to hike rates for the first time in 17 years. We'll also get decisions from the Fed, the Bank of England, and the S&P. Plus, Vladimir Putin warns that Russia will not be stopped from pursuing its goals after a predictable victory in a tightly controlled presidential election. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, EU foreign ministers are meeting in Brussels today to discuss Ukraine and the situation in the Middle East. The meeting also comes after Germany and France called for the European Investment Bank to step up defense spending. Well, Bloomberg's Oliver Kirk is at the European Council in Brussels. I think the meeting, Ollie, good morning, is about to start. So what are we expecting from it?
Yeah, that's right, Francine. We've just had the ministers walking in and taking some questions from journalists. And obviously, the main question for many people was, what does the Russian election sort of mean for the war effort in Ukraine? And what we've heard from a lot of people walking in is that it just means that Russia will continue on the course that it has taken so far, and that this is just going to sort of shore that up. Then there are some questions of how, in that case, to support Ukraine. There are big sort of macro movements and sort of policies to boost European defense spending. But the real question for the Ukrainians right now is, how do you get that ammunition onto the battlefield? So we know that there is this Czech plan in the works of getting up to 800,000 shells of ammunition. So I asked the Latvian foreign minister as he was walking in, how close are we to actually getting delivery of these shells? He says it could happen in the next couple of weeks, but actually the hang-up is here in Brussels about paying the money and getting those orders out. And that is what they're going to be discussing today in the meeting, as well as additional sanctions on Russia in the death of Alex Navalny and a number of other issues, including also Israel, obviously, and Gaza.
Yeah, and a number of countries have also basically asked the EIB to step up and focus more on defense financing. Take us through the proposal.
Yeah, so there's the situation on the ground, and then there's the step back. The EIB, what's interesting is they launched a sort of security function, part of the EIB, the European Investment Bank, where they lend for defense spending, right? But there was a sort of issue with it in the sense that that spending could only be put towards dual-use projects, meaning both projects and technologies that have both civilian and military applications. When we're talking about boosting spending on tanks, ammunition, fighter jets, those do not have really civilian applications, and that is what France, Germany, and 14 European countries want to change of the rules within the EIB in order to get more of that capital flowing, yes, from the European Investment Bank into the defense sector, but also encouraging other investors with that sort of confidence to be able to invest in those sectors. And we saw it today, even. The FT had this out in their research that IFO did. They're talking about the shortfall of NATO. They're saying that in order for all of the NATO countries to hit their requirement, that would require an additional 56 billion euros worth of spending. So it really creates the stark issue that we have here in Europe ahead of the EU leaders meeting later this week.
Oliver, thanks so much. Bloomberg's Oliver Crook there in Brussels. Now, Vladimir Putin says Russia will not be stopped from pursuing its goals after he swept to a record presidential victory in a tightly controlled election where he faced no serious competition. Well, to discuss all of this, let's get straight to Rosa Balfour, the director of Carnegie Europe. But Rosa, thank you for joining us. What are you expecting from Vladimir Putin in the next weeks and months, given his decisive victory yesterday?
Well, we expect a continuation of what he's been doing so far. For Putin, 2024 is actually a critical year. He sees the West as divided, as not able to deliver on its promises towards Ukraine. And therefore, it's a great opportunity for Putin to double down on the war in Ukraine and sow division in the West and in the global South.
So, Rosa, how would you characterize actually the EU right now? I know there's a lot of division, for example, because it's very difficult to get money from the U.S. into Ukraine. There are certain countries in Europe that think that we're giving too much to Ukraine. But actually, it seems to be holding up okay.
No, Europe is holding up on Ukraine. It's actually quite remarkable compared to over 2 years ago. Nobody would have expected this level of unity. And this will continue. But of course, the European Union was constructed as an actor working for peace, not working for defense, not working for war. So it does require considerable transformation, considerable investment on defense in order to step up the action. Also, add on to that the fact that the US's leadership is dwindling at the moment. So it actually is quite a request on European leaders to step up and fill that gap. But yes, you're right. It is holding up quite well. And I expect it will continue to do so in 2024 and in 2025. But it will be, there will be a lot of attention focusing on the divisions, on the difficulties of getting the commitment, the difficulties of getting the investments in financial terms. But it will hold up.
Rosa, so turnout for the election, right, for the 3 days of voting, I think was around 77.4%. That's according to the Central Election Commission, which was actually higher than back in 2018. Do you believe those numbers, and what do they indicate?
Well, I don't think we can believe very much coming from the Russian authorities. People are scared in Russia. People have been, the Kremlin has passed a number of laws and procedures and rules, and in order to get people to go and vote. For instance, anyone working in the public sector was cajoled into voting. So we should really take these figures with a pinch of salt. For Putin not to receive that kind of endorsement would have been a massive blow. So he has invested heavily in making sure that he would get good turnout and obviously a good result.
I mean, there are, of course, a number of news outlets and also Bloomberg sources saying that Vladimir Putin is now getting ready for a very long confrontation with the West. Yeah. Does that confrontation minimize if Donald Trump gets in the White House? How are you expecting a Trump presidency to react to this emboldened Vladimir Putin?
No, it's clear that Putin is making an investment on Trump winning the elections in the United States. This is the sort of outcome that Putin would welcome. And it's also clear that Putin is in this for the long game. However, I think we shouldn't expect the long game to be as favorable to Putin as is commonly assumed. The regime, nobody likes the regime in Russia, that people are scared and feel they have to vote for Putin. But it doesn't necessarily mean that the Russian future is one shaped exclusively by Putin. So I think it's important for the West to invest on supporting Russian opposition abroad, to supporting civil society in Russia, and making the long-term investments for what might become in the future a more pluralist Russia. Obviously, should Trump be elected in the United States, well, that changes the global picture generally, because we would have an unpredictable leader of the United States, and one who is positively inclined towards making alliances or deals with authoritarian leaders around the world.
How far do you think Putin can go? I know there's, every couple of weeks threats about even nuclear armament. We also understand that the Kremlin is putting a squeeze on countries such as Moldova, but also some of the Baltic states, all in the name, in the Caucasus region, really all in the name of protecting Russian minorities. Are we going to see a very belligerent Vladimir Putin in the next 12 months?
Yes. I mean, the first thing we've seen is that Russia has managed to turn its economy towards a wartime economy and is doing well. So the Russian economy has proven not just resilient, but it's actually doing well. Secondly, countries such as Moldova or Estonia, which have a sizable Russian minority, are on high alert because Putin could use excuses to invade. And thirdly, we should not underestimate the other ways through which the Kremlin manages to sow divisions in the global south, for instance, through military support, supporting coups or authoritarian countries in Africa. We've seen a string of coups in 2023, but also in democracies. That is by investing on disinformation ahead of elections, and generally undermining democratic institutions and structures through hybrid attacks, cyber attacks. So the Kremlin has actually developed quite a wide arsenal of ways in which it can interfere in other countries beyond military intervention.
All right, Rosa, thank you so much for joining us. Rosa Balfour, there, the director of Carnegie Europe, of course, the day after the results on this Russian election. Now, coming up, Apple turns to Google in its search for AI solutions. We'll discuss what it means for the future of the industry. That's coming up shortly, and this is Bloomberg. Well, Bloomberg has learned that Apple and Google are in talks that could see the next generation of iPhones powered by Google's Gemini AI engine. Hopes are high that Nvidia will unveil new products at its annual AI conference in California this week. Well, Bloomberg's Alex Webb is now with us. Alex, I mean, this is wildly exciting because there's so much hope and, pinned on the future of AI. What do you make of Apple looking externally for AI solutions?
Well, there are two sides to this, really. On the one hand, you've got what it says about Apple's AI efforts in-house. The implication of that, clearly, they aren't progressing very well, at least as well as perhaps the company would expect. But the other piece of it is, of course, what they're able to offer their customers. And if they're going to keep the iPhone as the dominant smartphone globally, they probably do need to be having something in this generative AI space. Google clearly has a very good product in this space, so it does solve a problem for Apple. It's interesting to see the shares in the pre-market don't seem to have moved a huge amount, so perhaps balancing those two things is what's going on. The thing that'll be really interesting will be the extent to which Apple decides to pivot over the years. Like if they do end up taking Gemini, and there were also talks with OpenAI, Mark Gurman's reporting, do they, after a few years, develop their own product which ultimately replaces it, or will they just go all in on this?
How excited are you about the Nvidia conference and the speech from the co-founder today?
I'm not sure excited is quite the right word. Yeah, I'm buzzing. Look, it's amazing actually how, a year ago, certainly 2 years ago, we'd barely have blinked at this conference, and now it is becoming pretty significant. Some investors, perhaps a little too optimistically, putting it in a similar bracket to those Apple conferences, WWDC, the iPhone launch.
They're like single-handedly supporting the whole equity market in the U.S.
In a sense, certainly right now, but that is also the risk, of course, because if this conference in any way disappoints, if some of the product roadmap doesn't look quite as exciting as investors have been anticipating, you get a little bit of profit taking. Like that is something we see with Apple events. If you think about the Vision Pro last year, in the course of that presentation, when Apple unveiled the device, it wiped 80 billion off the market cap of Apple. Now, often you hear the rumor, the adage is, buy the rumor, sell the news, right? Now, the stock has been trading pretty highly, but we have seen Nvidia surprise to the upside time and time again. So if there is very positive news in terms of what they're presenting, then you could expect a similar reaction to what we see in those instances.
Okay, Alex, thanks so much. Alex Webb there with the very latest, of course, on Apple and Nvidia. Now, it's also a big week for central banks. Rate decisions that will affect half the world economy. First up, the BOJ, widely expected to finally end its negative rate policy tomorrow. Let's bring in Ven Ram from Bloomberg's MLive team. Ven, good morning. The deck finally clear for the BOJ to raise rates this week. How will it play out on the markets?
Morning, Francine. Good to see you. Yes, I mean, the ducks have been lined in a row for the BOJ to act. I mean, we've had the biggest pay increase for Japanese employees not seen in a generation. So the decks are clear for the Bank of Japan to raise rates, albeit it's going to be a pretty measured normalization. When it's not going to be anything like, obviously, what the Fed did initially in the initial parts of tightening. So if we get to a terminal rate of 50 basis points, that will be pretty normalized for Japan. So any calculation on the yen and stocks have to take into account that terminal rate. And the yen is unlikely to be getting excited regardless of what the BOJ does tomorrow, because the bigger part of the equation for the dollar-yen narrative continues to be on the Fed side of the equation, which means that any big reaction in the yen will have to wait until after we know what the Fed does with its dot plot on Wednesday. If we get a hawkish pivot, I think dollar-yen will strengthen more. But if we get a dovish pivot, i.e. the Fed decides to stay with three rate cuts, I think that that yen will find a bid after that.
So what's the outlook for yen, really? Because, again, as you say, it could find a bid after that. But there's a number of things that the BOJ could also do with the balance sheet. And I don't know how much of those extra things are priced in.
Well, not very much is priced in. I think that if the BOJ starts thinking, sounds hawkish after raising rates tomorrow, let's say, and then they say that, look, we can gradually raise rates by measured steps from here, and they also do away with yield curve control, and they also do away with stock purchases, ETF purchases, then those will be taken as pretty hawkish signs, and that's not priced into the yen at all. And I think a quick first stop for the yen will be 144 per dollar. And beyond there, it really comes down to how much more the BOJ can go further into the year in terms of rate hikes.
So on the Fed, I mean, it's widely exciting, Ven, but there were also a number of press reports about possible, Fed chairs if Donald Trump became president again. Like, what do you think will support dollar, but also treasuries going forward?
Well, I think, the dollar will find support if the Fed proves to be hawkish. I mean, what we are hearing about possible Fed nominations are speculative, wildly speculative at this stage. We don't know who the president is going to be, much less who the Fed chair is going to be. So at this point, there's not much for the markets to price in terms of who the next Fed chair will be. But I think there's a lot that the markets will look forward to in terms of the dot plot, in terms of the summary of economic projections that we are going to get from the Fed. And that will drive the narrative for the next 3 months for the dollar and treasuries.
But have you seen, Ven, a shift for, I guess, bond traders latching on to the higher for longer narrative more than they did certainly even a week ago?
Yeah, absolutely. I mean, we got a pretty big sell-off in front-end treasuries last week. I mean, that 25 basis point surge we haven't seen in a long time. And at current levels of around 470, 472 on the 2-year, I think that the markets have kind of priced a higher for longer Fed trajectory. And even if the Fed says Fed takes back one of the rate cuts that they penciled in, i.e. they only indicate 2 rate cuts for 2024, if they go with that kind of narrative tomorrow on Wednesday, I think that, treasuries won't sell off a whole lot from here because of the humongous repricing we saw last week. So, but a dovish dot plot, therefore, will have a bigger asymmetry of reaction.
Ven, as always, thank you so much for joining us. Bloomberg M Live's Ven Ram. I urge everyone to go and read some of Ven's great writings on social media and, of course, also on the Bloomberg terminal. Coming up, Boeing's disastrous start to the year is spilling over to airlines and their passengers. We discuss what it means ahead of the key summer travel season with Charlie Wells. This is Bloomberg. While increasing appetite for riskier assets could be destabilizing the falling demand for luxury watches. Now, the Bloomberg Subdial Watch Index, yes, we have that too, which follows the 50 most traded luxury watches by value, was mostly flat for a second month, suggesting an almost 2-year slump could be nearing an end. Let's bring in Bloomberg's Charlie Wells all over the luxury watches. Charlie, at least for now, the secondhand luxury watch market appears to be stabilizing. So what's keeping the momentum?
Yeah, well, Francine, I've got a little Monday morning watch theory, can I tell you?
Yes.
Risk-on sentiment brings wrist-on sentiment.
I like it.
Yeah, right? So a lot of these, watch people, they're also Bitcoin people, they're also kind of day trading people, and they've been seeing, right, these great returns over time, and they're willing potentially to kind of, pony up for some of these more expensive watches. Also, Rolex and Patek Philippe are going to be launching some new models next month. And so there could be sort of a wait-and-see element here that's kind of stabilizing the market.
Okay, so we watch out for that. So I didn't even know we had this index.
It's great.
So we can play it through the index. But then the other thing we're watching out for is Boeing.
Right. I mean, this is really big. And so basically we know that Boeing's, safety incident that they had in January has meant that regulators will only let them produce 38 of those 737 planes. We've been reporting on that, how that has been spilling over to airlines. And now we have new reporting about how this could potentially be impacting the consumer with price increases. So Amex Global Business Travel has been saying that, on that route from New York to Los Angeles, which is so important, business class fares could be up 8.5% at peak travel. When you look at the route from San Francisco to Seattle, that could be up 18%. So some increases there.
And this is not just a Boeing issue.
Right. This is also an Airbus issue. And I mean, it's also a COVID issue. So looking back, one estimate said that, those COVID era delays denied airlines 4,000 planes. And so they've been kind of trying to deal with some of these setbacks. Airbus, they're booked until for at least 10 more years. So it's literally airlines just trying to get, enough planes, but they're dealing with a safety issue at Boeing. But also Airbus has had some engine wear issues on some of their planes, and that's grounded hundreds of planes as well.
Charlie, I mean, there's also a Bloomberg, of course, headline crossing the terminal saying cocoa futures have doubled from the start of 2024. I mean, without, specifically talking about cocoa, it just goes to, certain markets being quite hot, including coffee.
It really is. I mean, I love chocolate as well. And I think we've seen in some of these markets, Cote d'Ivoire and Ghana, we've seen bad weather. We've seen some sick trees. And so that seems to be, weighing there and creating kind of a supply issue in a lot of these commodities, not necessarily demand subsiding, which could bring in, higher prices.
Anything else you're watching out for? I mean, there's quite a lot of, companies that we're watching out for in the U.S. Nvidia is a big one, of course, with everything to do with AI.
Nvidia is big. I mean, we have that great news that came out about Apple and Gemini. I think that could kind of drive a lot of sentiment. But look, we have been seeing, so much risk on sentiment. It's even spilling out into kind of crypto, and we're seeing, a lot more interest there. So let's see what the week ahead brings.
A lot of news that I can tell you for free, especially a lot of central bank news. Charlie, thank you so much. As always, Charlie Wells. Now, coming up, the Barclays chief executive, then Kat, joins Surveillance, that exclusive conversation at 11:15 a.m. UK time, 7:15 a.m. in New York. Well, Surveillance is up ahead, and this is Bloomberg.